Welcome to the debate. We are diving deep today into the foundational insights from Chapter 1 of some new material, and it's focused squarely on maximizing profitability for insurance restoration contractors, specifically roofers. The author, Latif, of Boss Up Solutions, he makes a very bold claim. He identifies what he calls the supplement revelation as the single biggest financial opportunity for these businesses. The idea is that aggressive, systematic documentation is the key. So the central question we really have to tackle is this. Is this aggressive, systematic focus on maximizing supplemental claims, arguing for every last dollar, a universally sound and sustainable strategy? Or does this monetization-driven approach maybe mask some underlying operational complexities and, potential relationship risks?
That tension is absolutely critical. And look, Latif presents a financially undeniable thesis about the available revenue, but I come at it from a different angle. While proper supplementing is, of course, necessary, I challenge the assumption that pursuing maximum supplement revenue, aiming for that $3,500 plus average that the material calls strong supplementing, is easily integrated or even sustainable without a massive, sustained organizational investment and, frankly, significant non-financial costs that small contractors really have to consider.
I see why you'd think that, focusing on the infrastructure. But let me give you a different perspective, one that's really rooted in professional mandate. For me, supplementing is not optional. It is the fundamental professional obligation. The material makes it clear. The contractor's duty isn't just to replace the roof. It's to restore the property to pre-loss condition compliant with codes and manufacturer specs. And when the initial estimate, which is, drafted quickly by an adjuster who might only spend 30 minutes on site, falls short, documenting the necessary scope isn't asking for a favor. It's fulfilling the duty to the homeowner and the insurer. The financial impact here is, it's truly transformational, not just incremental. Consider the small contractor math from the chapter. 50 jobs a year. Conservatively supplementing at $2,500 per job adds $125,000 annually.
And crucially, that revenue mostly drops directly to the bottom line because the marketing and acquisition costs are zero. It's pure profit on existing jobs. It could double the net profit for a lot of small operators.
Okay.
Contractors are held back by fear, the fear of rocking the boat. But good adjusters respect well-documented supplements. If you have a system and it takes, say, 45 minutes to prepare, yielding $2,500, that's an immediate return rate over $3,000 an hour. This is not about asking for more money. It's about documenting the correct amount.
That's a compelling argument based on the raw financial output. And I'll admit, the hourly rate calculation is seductive. If the system could genuinely deliver $3,000 an hour consistently, every contractor would be running it tomorrow. However, I just don't buy that the operational uplift required to achieve that strong supplementing, that $3,500 average and beyond, is simple or inexpensive or, frankly, achievable in that 45-minute window without years of infrastructure development. The source itself kind of undermines that simplicity claim when it discusses the compound effect. To get these highest returns, it notes the need for initial implementation, process refinement, and intensive team training, all spread over 3 years. This isn't a quick fix. This is building a complex operational infrastructure designed to win technical arguments. Look at the case study, the job that jumped from $17,400 to $22,800, a 31% increase. It required documenting 12 distinct, highly technical line items. We're talking about citing specific references like the International Residential Code for drip edge, citing manufacturer mandates for hand sealing, and using granular details like OSHA supervision costs. Achieving that depth demands significant specialized knowledge. Not something easily done in 45 minutes by a general office worker without serious training and robust systems. So the true cost of building and maintaining that administrative system is often, I think, dangerously understated.
Well, let's address the expectation of the insurance carrier, because that's core to this. I'd maintain the insurance industry expects supplements because their initial estimates are inherently limited. A field adjuster is looking at thousands of claims a year. Their assessment is quick. 30 minutes on site, maybe with binoculars. Our material clearly identifies the three main financial gaps supplements address: estimate failure, like missed square footage; hidden damage, rotted decking; and code requirements, which are always changing. We are simply closing a documentation gap that the existing system creates. If you present that documentation clearly, citing specific codes, providing photos, cross-reference to Estimate line items, approval becomes the path of least resistance for the desk adjuster. We're actually facilitating their job by doing the homework for them.
I agree entirely that supplements are necessary and expected to cover those gaps. That gets you to the conservative $2,500 average. But let's distinguish between what they expect and what they are, let's say, eager to approve. I challenge the ease of approval for the high-value items that push you from conservative to strong. Are they genuinely expected to just greenlight things like $891 for additional tear-off labor or $808 for updated Xactimate pricing without significant internal scrutiny and multiple rounds of negotiation? The material shows this huge potential reward, over $1 million in additional revenue for a large contractor doing strong supplementing, but that magnitude implies a constant, sustained intellectual battle. This isn't just documentation. It requires mastery of specific negotiation strategies and detailed training on 40-plus technical line items.
That level of engagement shifts the contractor's role from restorer to financial litigator on every single job.
That's an interesting point about the pushback, but I'd frame the psychological element differently. The deepest reason contractors fail to capture this revenue, it isn't the technical complexity, which can be solved with a system. It's the subconscious psychological belief that asking for the correct documented amount is somehow greedy or a burden. This is the barrier Latif identifies. If professionalism dictates code adherence, then documenting IRC 905.2.7.1 for ice and water shield, or legal safety requirements like OSHA fall protection is mandatory. It's required to deliver a warranted, legally compliant product. So failure to supplement is in fact cutting corners on the customer's behalf, failing to restore their property completely. We have to move beyond that fear of pushback and see this as just accurate cost accounting.
I appreciate that psychological framing, but I'm not convinced that resistance is always based on fear. Sometimes it's a rational business risk calculation. If achieving that maximum $3,500 average requires these constant, protracted battles over a dozen technical line items, forcing the desk adjuster to escalate every single claim, you run the very real risk of jeopardizing your relationship with a high-volume carrier. A mid-sized contractor doing 150 jobs a year cannot afford to be flagged by a major insurance company as difficult. So is the rational business choice truly to maximize the dollar value on every claim, or is it to optimize the dollar value? Settling consistently at a profitable, slightly lower average to maintain flow, speed, and carrier relationships. The cost of having a major carrier slow pay or flag your claims far outweighs the extra few $100s you chase on one job.
The beauty of the systematic approach, though, is that it removes the need for those battles, provided the documentation is flawless. The systems themselves provide the legal and technical citations needed to preemptively overcome that scrutiny. When you suggest that the pursuit of maximum revenue diverts core attention, I'd actually counter that it refines core attention. That metric is powerful. 45 minutes to capture $2,500. Yes, the negotiation might take more time, but that negotiation, the problem solving needed to secure high approval rates, is a much higher leverage activity than spending hours bidding non-insurance jobs or generating new leads. The contractors should prioritize the activities that generate the greatest return per hour. If they perfect the art of supplementing, they are maximizing revenue by improving accuracy and compliance. Investing in a supplement system is investing in operational excellence, not diverting from it.
Okay, but we're discussing the distinction between the conservative profit level and the strong profit level. The pursuit of that extra $1,000 per job requires a qualitative shift in your operation. To sustain the strong supplementing average, you have to build systems that not only capture the damage, but track highly time-sensitive data, like that 6-week lag in Xactimate pricing that warrants the $800 line item. That demands a dedicated specialized resource. And while you say this is high-leverage activity for a small contractor, that 45 minutes of documentation, plus the negotiation time for 50 jobs a year handled by the owner, that quickly leads to burnout.
So is this singular focus on hitting that $3,500 average the optimal use of resources, or does that pressure displace time better spent improving initial estimating accuracy in the field, or focusing on high-return customer satisfaction and referrals, which are less administratively burdensome?
But the profit impact is undeniable, and it's compounding precisely because this high-margin revenue fuels the ability to hire those dedicated resources you're talking about. Let's look at the compounding effect from the chapter. For a mid-sized contractor doing 150 jobs, conservatively, supplementing adds $375,000 annually. This high-margin revenue increases net profit by 62%. That money is high-octane fuel for strategic growth. Hiring that dedicated operations manager or supplement specialist, expanding markets, achieving stability, these are funds the contractor is legitimately entitled to. The revelation here is that this deserved revenue is just being ignored because contractors failed to document fully. Adopting the system is the mechanism that ensures financial stability.
I agree that the numbers are extremely compelling. They demonstrate a profound opportunity. But we have to be precise about overhead. I must strongly question the assumption that most of that $375,000 drops straight to your bottom line, especially when moving into that strong supplementing category. Achieving those consistent $3,500 claims, the ones with multi-layered code citations and detailed cost arguments, requires massive investment. We are talking about hiring a dedicated, highly trained supplement admin, which is a $60,000 to $80,000 annual expense. We're talking about thousands in annual software licenses and dedicated training budgets. These overhead costs are necessary to sustain the system and prevent the contractor from being completely overwhelmed. If a small contractor tries to leap straight to strong supplementing by themselves without factoring this in, the real cost is exhaustion, burnout, and inconsistency, which just dilutes that promised net profit margin.
We agree on the necessity of systemization and training. My argument is simply that that investment is a non-negotiable cost of operating a professional restoration business today, and it unlocks otherwise inaccessible profit. The material gives the contractor a clear pathway. Start with conservative supplementing, use that new profit to immediately fund the hiring of a specialist and the tools needed to reach the strong supplementing threshold in year 2 or 3. The contractor who fails to make that initial investment is the one who remains small and struggles with margins. The supplement revelation just makes the path clear.
And I would conclude that while the financial rewards are crystal clear, contractors must approach this maximization strategy with their eyes wide open to the massive, necessary investment in specialized knowledge and systematic overhead required. Achieving that consistent, high-average supplemental claim requires a complete organizational overhaul, not just a new template. It demands operational maturity, and the contractor has to manage that transition carefully while maintaining professional relationships with the carriers who provide their job volume. It's a trade-off between maximizing technical recovery versus optimizing stable business flow.
This discussion has certainly illuminated the critical role of rigorous documentation and professionalism in this business, and it highlights the distinction between documentation as a mandate versus the organizational investment required to maximize its return.
Exactly. We've shown that understanding the supplement revelation requires weighing the immediate financial benefits of an aggressive pursuit against the necessary long-term administrative commitment and, yes, the potential costs of carrier friction.
This discussion was based on foundational insights from Chapter 1 of the new material, a foundational piece for Boss-Up Solutions, authored by Latif. Be sure to tune in to the next chapter as we continue this important series on transforming your contracting business.